In places like Bitcoin Beach and El Zonte, merchants accept Lightning payments for one simple reason. They want money from tourists. They're not adopting Bitcoin. They're accommodating visitors who want the experience of paying with Lightning. And you see the same pattern in places like Bitcoin Jungle in Costa Rica or Bitcoin Lake in Guatemala. Small tourist pockets where Lightning is accepted because visitors expect it, not because locals are using it. But when you look at what actually happens during one of these payments, the whole thing becomes performative. The tourist starts with their local currency. They buy Bitcoin with that currency. They move it into a Lightning wallet, they spend it, and the merchant immediately converts it straight back into the same currency the moment it arrives. Not because they dislike Bitcoin, but because they pay rent, suppliers, employees, and taxes in the currency their country actually uses. They can't take on the volatility risk of holding a speculative asset just to sell a drink or a sandwich. So the payment isn't really using Bitcoin as money. It's a round trip back to the traditional system, with Bitcoin acting as a decorative middle step. And because every Lightning payment is technically the disposal of a volatile asset, the customer is expected to keep track of all of this for tax purposes, which is absurd for something as simple as buying a coffee. Then there's the volatility itself. You don't know how many sats the next transaction will cost, and the entire Bitcoin ethos tells you not to spend your sats at all, because the narrative is to hold them forever and wait for the number to go up. So what's the point of any of this? It isn't practical, it isn't efficient, it isn't real adoption. It's a performance, a PR exercise designed to create the appearance that Lightning is being used in everyday commerce. But behind the scenes, both sides still rely entirely on the traditional financial system. The Bitcoin part is just the decorative middle step.